Thanks, Chris. Let's get more from Scott Phillips, the Chief Investment Officer at Motley. Scott, good evening to you. The best performer today was health company Nanosonics, up 21%. Investors liking their profit result and projections.
Tomo, good evening. Yeah, a remarkable result for Nanosonics shareholders, up 21%, and a pretty good result for the company considering. Now, profit was actually down, if you can believe it, on last year, but such were the low expectations that even just some sense that things weren't as bad as they could have been sent the shares flying. Now, of course, Nanosonics selling into hospitals around the world. No surprise, you couldn't get a meeting for love nor money in the middle of a pandemic, completely appropriate for everybody. Luckily for shareholders, the results weren't too bad. And the company also announced a brand new product coming out soon, which has been in the works for 2 or 3 years. So a good day for Nanosonics.
The big miners all bounced back thanks to iron ore prices steadying a little. Scott, do you think the iron ore price has found its mark?
Setting a little is about the best you can say for it, Tomo. It has been a decent few days after a precipitous fall from over $220 a tonne, now down to $155 or so, depending on when we're talking about it. It's very, very volatile at the moment. The challenge, of course, is that even at these prices, they're still making 75% profit margins. Those are software profit margins. When you're getting out of the ground for $15, $18, $20 a tonne, there's plenty of competition that can enter the market over time. Of course, the big question is the Chinese demand reports they're cutting back on steel production in China, which has really put the skids on the iron ore price. Look, I don't do short-term forecasts, Tomo, but I wouldn't be at all surprised if the price is lower rather than higher over the medium and long term.
OK. Now, Chris mentioned the near 16% fall in Kogan. Were there any bright spots in their results?
Hard to find them, wasn't it, with that sort of fall? I should disclose I own shares in Kogan, so take that with a grain of salt as I continue to talk about it. An 80% fall in profit and the scrapping of the dividend that Chris mentioned really worried shareholders today. On the flip side, if you're looking for positives, and I think it's reasonable, the revenue's up more than 50% year on year. The number of customers up more than 40%. The real question for Kogan and Kogan shareholders is whether it can get its costs under control and the inventory also fixed. They had an $8 million cost blowout on inventory management over the past 12 months. They basically stocked up for long-term value growth in demand. It simply didn't happen. Of course, we went back to the shops and back out in public. Maybe new lockdowns will help the business, but it will be a wait-and-see story.
Finally, Scott, how's Wall Street shaping up tonight?
You mentioned we've had 2 good days. This hopefully will be a third for us because at the moment, Wall Street up just under 1/4%. Let's hope it carries over for their night tonight and our day tomorrow.
Fingers crossed. Scott Phillips, thank you.